Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I would be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns, the derivative analysis of Nifty, Bank Nifty, as well as the different asset classes. Now this video is for education purpose only. Please consult your financial advisor before investing. Now first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that our markets, I mean to say Indian markets, are just about to test its lifetime high. So any dips should be buying opportunity. And on week basis, the markets are getting the charts are getting sharper and sharper. So sooner rather than later, markets will cross its lifetime high, or at least it will test its lifetime high. And after that, once it closes above those highs, then we will take a further view. We have been taking a bullish stance from the levels of 16,900 or 17,000 mark, and we have been on consistent basis recommending to buy on dips strategy. Maybe in couple of days we have taken a sideways view, but overall we have taken a bullish view, and market has performed on our expected lines, and still we are bullish on the markets. Now, uh, let us check out the daily charts of the US markets. We will just discuss Indiavix also, and then we'll go to the Indian markets. So first of all, let us discuss, or let us check out the Indiavix, so that we will have a clear view where the volatility index is going and what would be the chances of the markets to go further. Now, since last couple of days or last couple of weeks, you can clearly see India VIX has been moving slowly and gradually down, and markets were inching higher. Now you can see this since last maybe 3 weeks. Uh, this particular resistant trend line has been maintained, and still multiple times it has failed to break those levels. So definitely, until and unless India VIX doesn't break 11.62 mark, markets might remain bullish. And looking at this particular candle, also we feel that slowly and gradually India VIX might get weaker from here. Maybe in next 4 to 5 months, India VIX might test the levels of 9.13. Currently, it is quoting at 11.12. So if India VIX starts sliding from here on the downside, maybe towards 9 or 9.13, then market there are very strong chances that market will break its lifetime high and scale further from those particular lifetime highs. So this is just a view. Uh, on basis of India VIX, we are bullish on the markets. So now let us check out the Dow Jones daily charts, the American markets. In Dow Jones also you can clearly see we have clearly seen downward falling wedge breakout. The markets are way above those particular breakout points. You can clearly see on the charts. Now here on the upside in Dow Jones, the major resistance seems to be around 34,800, and currently it is quoting around 33,876. It has formed a flag pattern, and it has already given a breakout. So on immediate basis, maybe next 10 to 12 trading sessions, Dow Jones might test the levels of 34,354. So looking at this particular charts, a downward falling wedge breakout in Dow Jones is clearly indicating that US markets are also poised to inch higher from these levels. The global markets are showing strength, and the US markets are also looking bullish at these levels. Now, before discussing the Indian markets, let me just mention that next week is FOMC meeting, the US Fed meeting, and they might again go for a pause in rate hike. I think that already this news has been discounted in the markets, in the US markets. That is the reason why the markets are inching slowly and gradually higher. But at least until unless we don't get what is the stance which Fed is going to take, what would be the statement from the Fed after the FOMC meeting, that would be the crucial one. So market might behave volatile throughout the week, But looking at the Dow Jones charts, as we have seen that the primary trend is bullish. So if there is any correction, buying would be seen at the lower levels. Now this is what I just wanted to mention, at least before discussing the Indian markets. So now let us check out the Nifty daily charts, and we'll try to figure out what could be the trend for the next week on the back of the FOMC meeting. Now you will see on the Nifty daily charts, last two trading sessions Nifty has given a negative close. This is the daily charts. This is the rising channel, and Nifty has slightly closed below those particular support region. So slightly, it seems to be weak at these levels. But there, look, if they see these three particular candles, if you can see the particular candle of maybe 1st June, 31st May, 1st June, and 2nd June, it a cluster of major support area. So market might take support. I mean to say Nifty might take support at these levels. And as I said, next week is the FOMC meeting, and the global markets might behave volatile, but the overall trend would be bullish. So similarly, even I feel that markets might be highly volatile, but at lower levels we might see support coming in at the lower levels. Now why this support has been coming, why this support might come at the lower levels, the reason is that last two days there has been strong out of the money call writing which have been observed, which we will discuss when we will see the derivative data. So we might see a short covering in the calls, writing of calls. So that will propel the market to inch higher. But looking at this particular charts, slightly it is weak, but lower level, the support cannot be ruled out. Now let us just see what is the weekly pattern. On weekly basis, Nifty has formed a high wave doji, or we call it as an inverted hammer. So at least for the next week, I feel Nifty might trade in this upper shadow. Upper shadow means in the range of maybe 18,550, and on the upside 18,777, which was the last week's high. So this is the area where I feel that Nifty might trade at least for the next week. Uh, the view could be bullish. Any dips should be used as a buying opportunity. Now, friends, let us discuss the important supports and resistance level in Nifty for the next week. The first support in the Nifty is placed at 18,464. Below that, the second support is placed at 18,333, and third support is placed at 18,202. On the upside, the first resistance is placed at 18,676. Above that, the second resistance is placed at 18,777, and third resistance is placed at 18,888, which is the lifetime high. So these are the important supports and resistance level in Nifty. Traders should try to just follow these levels, watch out closely, wait for some consolidation at lower levels, and then once it breaks the consolidation on the higher side, traders should go long, which we are expecting that might happen in the next week. So overall, the trend seems to be buy on dips, but with strict stop losses. So now, friends, let us discuss the derivative data of Nifty calls. You will see on the screen the Nifty calls. The action was seen in 18,600 calls, 18,700, 18,800, and 18,900 calls. Now here you can see the implied volatility is very low. Here you can see there has been a significant drop in option premiums, and there has been a rise in the open interest. There has been a rise in the volumes. So on the immediate basis, as I said, the upside immediate resistance is 18,600. You can clearly see there has been strong call writing or strong out of the money call writing, which we have discussed earlier when we were discussing on the charts. So if Nifty crosses 18,600 spot levels, then we might see short covering in this Nifty out of the money calls. So definitely, which will take Nifty towards the upside, maybe 18,550 to 18,800 in the next week. So looking at this data, we feel that 18,600 would be crucial. If once the Nifty crosses 18,600, one should avoid going short. Those who are short should try to exit from shorts, and one should go long at least for the target of 18,550. So friends, now let us discuss what we have observed in Nifty puts. In Nifty puts, the action was seen in 18,500, 18,400, 18,300, and 18,200 puts. Now here you can see there was rise in the open interest, rise in the volumes, implied volatility is between 9.12 and 10.57. The percentage or the option premium change in puts is not that much significant. That means the smart money has not yet started buying puts. So maybe uh, more downside is not seen at these levels. But looking at that particular Nifty call data, we feel that on the downside, 18,500 could act as a major support. Now here you can see the concentration of volume in 18,550 and 18,500. There is a strong volume and open interest concentration. So definitely on the downside, 18,500 could act as a major support. If it breaks, closes below 18,500, then only there are chances that Nifty might drift down towards the level of 18,300. But looking at the percentage change, it is very slightly uh, positive to flat to positive. So we don't think that the smart money had started buying puts. In fact, if Nifty takes supports or Nifty finds supports around 18,550, then there are chances that smart money starts writing puts. Maybe this 18,500, that we'll see on Monday. But looking at this pattern, the data is not showing any kind of weakness. Any dips should be used as a buying opportunity. So now, friends, let us check out the data of Bank Nifty daily charts. Now here is the Bank Nifty daily charts. You can clearly see in Bank Nifty, this is the support trend line which has been maintained from the lows of March 2023 lows. Still, it is maintained. Currently, Bank Nifty has ended on an inside day candle. You can clearly see Bank Nifty has made an inside day candle. So still it is not bullish, nor it is bearish. It is inside day. So the trend deciding level in Nifty and in Bank Nifty could be 44,220, which was Friday's high, and 43,917, which was Thursday's low. So these could be the trend deciding level. And on next week, at least, I'm expecting that Bank Nifty might trade in the shadow of Friday's candle, which is between 44,044 to 44,220. And if it closes above 44,220, then there are chances that Bank Nifty might test the levels of 44,555. So looking at this inside day candle, we feel that the trend is still bullish. Any dips should be used as a buying opportunity. So now, friends, let us discuss the important supports and resistance level in Bank Nifty for the next week. The first support in the Bank Nifty is placed at 43,703 is the first support. The second support is placed at 43,588, and third support is placed at 43,125. On the upside, the first resistance is around 44,220. Above that, the second resistance is around 44,459, and third resistance is around 44,733. These are the important supports and resistance level in Bank Nifty. Traders should minutely or closely monitor these levels. Wait for Bank Nifty to consolidate, and once it breaks the consolidation levels on the upside, one should start going long in Bank Nifty from the breakout point. So friends, now let us discuss the derivative data of Bank Nifty. You will see on the screen the Bank Nifty call data. In Bank Nifty calls, you can clearly see the action was seen in 44,200 calls, 44,500 calls, and 45,000 calls. Now here you can clearly see there was a rise in the open interest, rise in the volumes, and rise and drop in the option premium. Implied volatility is between 10.15 to 10.92. Now clearly looking at the drop in the option premium is clearly indicating that the smart money has already been active in writing out of the money calls in Bank Nifty, which is the reason why we have seen a sharp drop in the markets in the last two trading session of last week. That means on Thursday and Friday. So on immediate basis, as I said, and on the charts also, 44,200 is a crucial resistance. And then here also on derivatives data also you can clearly see the concentration of open interest and volume is strong at 44,200 calls. So once it breaks 44,200 in Bank Nifty and closes above those levels, then there are chances that Bank Nifty might initially scale towards the levels of 44,500 and above that 45,000 in short to medium term. So looking at this data, yes, smart money has already been active in strong out of the money call writing, but that could turn in short covering if Bank Nifty crosses 44,200 mark in the next week. So now let us discuss what we have observed in Bank Nifty puts. You will see on the screen in Bank Nifty puts, the action was seen in 44,000 puts, 43,500 puts, and 43,000 puts. Now here you can see there has been rise in the volumes, rise in the open interest. There has been drop in option premium, and the implied volatility is between 11.9 to 13.23. The implied volatility is slight higher at these levels. So any further weakness would the implied volatility might go into danger zone. So that might uh, bring in short covering in Bank Nifty puts. So definitely the data at these levels in Bank Nifty is showing that the smart money has already been factored in, that Bank Nifty, at least specifically Bank Nifty, might remain range bound at least for the next week. Why? Because on both the sides, in calls also and in puts also, there has been the option writing which has been observed on this particular data. So looking at this particular uh, charts of Nifty and Bank Nifty and derivatives data of Nifty and Bank Nifty, the strategy remains to be bullish. Why? Because Indiavix is showing some sort of weakness at these levels, which if Indiavix goes down, then markets might go up. Dow Jones is has given a flag pattern breakout, which is clearly indicating that any dips in the Dow Jones will bring in support at the lower levels, and Dow Jones also might slowly and gradually inch higher in the next couple of trading sessions. So definitely we feel that, sorry for that. So definitely we feel that the markets are bullish. Any dips should be used as a buying opportunity from these levels. So friends, now let us go to the final segment of our show, which is positional call. I have identified one stock. The name of the stock is Manappuram Finance. The stock has given a triangular breakout. You can clearly see after a significant drop in the stock didn't witness any kind of follow-up selling. Instead, or in fact, stock went into a consolidation, which we can observe on the charts in a triangular formation, and it has already given a breakout. So this is clearly indicating that stock has turned bullish, and the price, volume, and indicators are clearly indicating that the stock is poised to inch higher from these levels. So, long term investors, swing traders, positional traders, short term investors can accumulate the stock in the range of 117, which is the current market price, and on corrections to 111 for an upside target of 134 for short to medium term. Now, short to medium term could be maybe next 3 to 4 months or 5 months, because this stock is a slow mover. That is the reason why we have taken at least a conservative call. So the price, the charts are looking promising. This stock should be in one's investment portfolio, or at least in the trading portfolio. So one should accumulate the stock in the range of 117 and on corrections to 111 for an upside target of 134 in short to medium term. So friends, let us conclude the show. Thank you very much for watching the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.